Price action has secrets to reveal, and few are better at revealing them than Justin Spiro, a highly experienced and very consistent trader on our prop desk. In this video, Justin will dissect his trades bar by bar to show you how to clearly decode the price action and thus get precise entry and exit signals for your trading. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to have developed numerous 7 and even 8-figure per year traders. We hope you agree. This is the top YouTube channel to help you grow your trading account.
All right, guys, welcome back to another bar by bar video. I'm going to go over or try to get through 5 trades from this week. And we're going to start off with NVIDIA. Full transparency, this NVIDIA trade I missed, but I want to go over it because it was a really great momentum breakout. The rest of the trades I will review today, I did take. Steve Spencer did really well on this NVIDIA breakout over the recent 52-week high, breaking this 280 level, and it's worth going over. So right away, Monday morning, NVIDIA was gapping up towards that breakout area, and I'm sure it was on his watch list. So you could see this pre-market high level at 279. We'll mark that off. So off the opens, consolidating under that pre-market high, and then it rips right through it, and you get the highest volume bar since the opening price. Normally at 9:30, that'll be the highest volume bar of the day in most cases. And you can see that we're getting the highest volume bar 5 minutes into the day. And basically what's happening here is it's going green on the day and it's breaking the pre-market highs on volume. You can see this volume bar is a 400,000 share volume bar. And what I have here, you can see this bar thresholds. It's a really interesting tool that Garrett Drinnen built for us. And basically what it does is I'll look back at the last 1,950 1-minute volume bars, which equates to the last 5 days worth of 1-minute volume bars. From there, I'll plug in 2.5 standard deviations. And what that is going to do is it's going to look at the threshold to the top 1% of volume bars for the last 5 days. That way, and it's going to flash when it breaks that threshold. And that way you could really get a good idea of how important that volume bar is. In this case, it was pretty important because it was about, it was about 210,000 shares over that threshold. So ideally, what you want to do is you want to get long, and that volume bar, it should not retrace and it should not go back red on the day. So the low of this volume bar is right around the opening price, and that's a really good stop. What you could also do is you could take a little less risk and you could just put your you could put your stop at low of day. From there, you can see it tests 280. It's holding up really well. It's consolidating for a couple minutes and then pushes higher. At this time, you have the option to just set your stop back below this candle here. And then you want to ride that trend until that trend breaks. And you could see a little bit of a failed follow-through high here, and it starts to break these EMAs. And in my opinion, this would be a great time to take some profits off the table, adjust your stop to break even, and let the rest ride. And you can see how well, and I think I've brought this up in previous videos, but what I like to use is the 9 and 21 EMA. And when a stock is going to trend really strong, it's going to hold both of those. Some people ask me why the 9, why the 21 EMA. That's just what I was taught from a veteran trader. So that's what I've used. Some people will just use the 10 and 20, which will be very similar. And you can see it just holds that EMA, holds that 21 EMA, and then continues that uptrend. And ideally, if you're in a trade that's working really well, a good rule of thumb and something my risk manager taught me back in the early days was that you want to try and hold at least 10 to 20% of your size, and you could adjust your stop to break even, and you want to let that ride. Back in the very strong bull market days, there are times where I would often make more on that 10 or 20% than I did on the rest of the position that I was scaling out into momentum with. Just a thought there. Moving on, and from this trade forward, these are all trades that I did take this week, and I want to go over them. Meta was really interesting. So you could see that it is hitting 52-week highs on this massive day one earnings gap. Let me start off with this. Anytime that I see a really strong earnings day one, and it holds up really well, doesn't give much of the gap back, that's going to stay on my radar. And I'm always going to be looking at that earnings day one high, because in most cases, these Strong's earning stocks will take a few days to consolidate gains, and then it'll break above that earnings day one high. So this was just on my radar for that, and I was watching it. This is day 3 after they reported earnings. You could see in the morning, really not much going on, but I got an alert at the bottom of the range here at 237. I pulled Meta up and I just kept it on watch. Want to see if it was going to break that or hold that. And what we have is it ends up holding that 237 and reclaiming VWAP. It's very subtle, but you can notice at around 12 o'clock that some volume starts coming in over VWAP. Pretty much the highest volume in this 1220 to 1230 time frame. Those volume bars are similar to the opening volume. So whoever's buying this, whoever's getting squeezed out, they can't really hide that volume. And that doesn't mean I'm taking a trade yet. I'm just stalking it. The next thing I want to see if it could hold near high of day and break that intraday high. So I'm keeping an eye on this, and at the same time, I'm watching the cues. So anytime you're trading a large cap tech stock, you want to keep your eye on the NASDAQ and see how that is trading, because something very important is you want to have the tailwinds from the overall market at your back. That is a huge check in favor if you're trading large cap tech or any big market stock for that matter. So at this time, the Qs were actually back at high of day after holding under VWAP for most of the day, and they were making a new high. So that's another check in favor for me. Check in favors, it's holding this 237. Check in favors, volume is coming in over VWAP. And then it just starts consolidating. It's holding up really well. And it starts to curl up. Typically, I'm not a fan of breakout trades in the middle of the day, but I did like that hold of 237. I liked all those checks in favors that I mentioned. So what I did was I ended up getting long on this curl up out of this consolidation. Something I also want to mention is how well it held near high of day on low volume. So you can see you have some volume coming in towards high of day, and then it just consolidates at highs on low volume. So it's showing me that it is able to hold those gains. So I end up getting long on this curl, and I like to call that a curl. So when you have a consolidation, you don't need to make it complicated. This looks different than what we've seen this entire consolidation. It's just consolidating, and all of a sudden you have some volume coming in, green bar, green bar, green bar. I like to call that a curl out of a consolidation. So what I do is I end up getting long, putting my stop below the consolidation, and then I'm patient. It tests the intraday high, fails, pulls back, holds that 21 EMA, starts curling up again, and then boom, you see this volume come in, and you get a really nice 2.5 point move there. I was not expecting it to work that well, so what I like to do is I like to scale out. You can see that it puts in a new high. It's breaking over that earnings day high on volume, elevated volume. And if we look back, we don't see a volume bar like this since the first 20 minutes of the day. Actually, it's the second highest volume bar all day. So that's very, very significant. I didn't expect such a strong move, 2.5 point move. And I'm going to take that win, and I'm going to scale out of about 75% of the position, because you could see that it puts in a new high and it ends up being a failed follow through new high. And then later on, it puts in a lower high. So I'm scaling out, and I'm going to leave 20% on in case this wants to continue to break out. And I held that 20% into the next day. You can see that it pushes higher. It's struggling. I'm taking profits on about 10% of the position, what's left, and I end up getting stopped out of the rest below low of day. Okay, moving on. This IMGN was pretty interesting. This is a 50 million share float. It got some positive news, and typically I don't trade biotech stocks, but something that I will pay attention to is anything big like positive cancer drug news or heart disease. anything big like that. So you could see that if we look at the daily chart, just a massive gap up right off the open. It's doing a ton of R-vol. I believe like R-vol is like around 1,000. And we have this $12 level that failed after the news came out in the morning, and it just consolidates over VWAP, kind of curls up into the open, and then ends up just testing that pre-market area here. Now, if we zoom in, I'm watching this, nothing to do right off the open, but what I do end up noticing is it puts in a low, puts in a higher low, and then consolidates higher. It's holding those EMAs really nice, and then it ends up coming up, testing that $12 level on the highest volume of the day. Now, again, what you'll notice, which is similar to Meta, is it ends up holding near that $12 resistance, volume dries up, and it's able to hold up really well, which is a good sign. Holding those EMAs, starts to curl up, breaks $12, pretty simple trade. You just put in a buy stop above 1201 with the thought that there may be some shorts trapped in this who weren't buying the news. And then you could see that, it ends up being a really nice breakout, and basically you get a 10% move on a $12 stock in less than 10 minutes. And I'm scaling out of that. That is a good move. The trade worked perfect breakout momentum trade over pre-market resistance. I'm scaling out of that into this up move. Anytime I see offers stepping up, I'm scaling out at 10%, and it starts to get a little extended from this 9 EMA, and I'm taking sales into this up move. What I end up doing is I leave on 20% of the position with a stop below this consolidation, just in case the stock wants to go crazy and squeeze. And then I end up getting stopped out on the rest, which is totally fine. And then just a little trick that I'll mention. Oftentimes, biotech news could be tricky if you don't have any knowledge, any background knowledge, or you're not a biomedical engineer. So recently there's this new tool out called ChatGPT, and what you could do is, if you have some really confusing data that you don't quite understand, you could copy paste that into ChatGPT, and you could prompt it to I don't remember exactly what prompt I used, but I did something along the lines of, could you break down why this data is positive? I don't have a background in biomedical engineering or biotech. Can you break it down into simple terms? And it did just that, and it gave me a great write-out of all the bullet points of why the news was positive. So, they had a medication being tested for ovarian cancer. The drug is effective at treating ovarian cancer, and ovarian cancer that is resistant to a certain type of chemotherapy. Patients who used that had better outcomes compared to those who received chemo. The trial improved survivability, and the medication showed an improvement of overall survival, and the company plans to submit their applications in Europe and US in the second half of 2023 to get the drug approved. There was just a laundry list of why this news was positive. Moving on to my best trade so far this week, AMD breaking news. So I caught this breaking news right after the first minute bar, and I'm going to share with you all how I ended up doing that. So I got the alert very quickly, and something that I like to use is TweetDeck. Basically what I have is I have a TweetDeck set up with some Twitter accounts that rip headlines from Bloomberg and post them right on Twitter. What you could do with TweetDeck is you could set alerts for pop-ups on your desktop, and you could also get, a sound effect when one of these people send out a tweet. So basically what happened is I saw this headline from right across that Microsoft is helping finance AMD's expansion into AI processors. In my opinion, that is just huge news. You can see the volume comes in. Let me remove these alerts. Volume comes in, pulls back a little bit. I'm buying this right away, and I'm assuming my risk is to the low of that breaking news candle here. Now, if this reverses and takes out the low of that initial spike on the news, it's just simply not as good as I thought the news was going to be. And that is always a really great stop. And what you have to do is you have to buy the first dip or buy the news right away if you're quick enough. And you have to accept that risk to the low of this candle, and that's your stop. So you can see that it started to have some trouble in front of 87. I'm scaling out of most of the trade there. And then it offers another break of this 87 on high volume. It's the second highest volume candle since the news started. So it's confirming that breakout over 87. And what you want to do is you want to just buy this, put your stop below this consolidation. And as that momentum's coming in, it's moving fast. It's going from 87 to 88 to 89, extremely quick. And in my opinion, you want to be scaling out of that consolidation breakout trade. If you think that it could go even higher, you could just leave on that 10 to 20%, leave your stop at the bottom of this consolidation. And then just another way to trade this, I know we spoke about this last week, but I just want to remind everyone, is to trail those 2-minute bars. So you buy the news, your stop is below this 2-minute bar, pushes higher, the next candle opens, you trail your stop to the low of this 2-minute bar, and you continue to do that until you get stopped out on this candle at 136. So that's a really great way to trail a stop for an opening drive trade and a breaking news trade. PacW, a regional bank, Wednesday after hours, there was a headline that they announced that they're considering a sale. And after FRC, we know that probably means they're selling to a bank for a massive discount, or the large banks let it fail like FRC and then buy it off the FDIC for pennies. So there was a Bloomberg note out also saying that the sale has been difficult because there are not many buyers interested. And basically what that means is they're pretty much following the same timeline as FRC. So that is a really strong breaking news trade if you're sitting at your seat. However, that put these regional banks in play on Thursday. So you could see that off the open on Thursday, WAL was drifting lower. It broke the lows and halted down. Now, during this halt down, a news catalyst came out that they're reportedly exploring options, including a potential sale of all parts of its business. As it was halted, this news came out. So unless you took that low of daybreak, you kind of missed out on that trade. But what you don't do is you don't sit there and fuss over it, get upset that you missed it, and this could have been a huge trade. It could have made my month, my year. What I did right away is I went to PacW. PACW was not halted yet, and you could see that it's kind of trading similar to WAL, and this is what I call a sympathy trade. That news isn't good for any of these regional banks, and you could see that it's breaking the lows and it's halting down or attempting to break the lows right at low of day. I am hitting in short into that halt, that limit down. So I see for my platform and our platform at SMB, you'll see LRP on the bid, which means that there's about to be a volatility halt and it's about to get locked down. Some platforms say something a little different. And I'm getting short right into that. And what this should do is it should gap lower and continue lower. And my stop for this trade is simply the high of that bar that locked down. It opens. And when it opens, I want to see the bids drop out right away. And that's exactly what happens. And it gets locked down into a second limit down. And I'm adding to my position. Now the stop becomes this high of the second bar that locked lower. It pops up into 310, just gets crushed lower again. Does not halt, but what I'm doing is I'm moving my stop now to the high of this bar, and it locks limit down again. Then it ends up trading lower. The bids are stacked at 250. They leak it below 250 just a little bit, reclaim, hold 250, I'm out. Starting to break this trend here. And this was my second best trade this week. Very simple, and these sympathy trades are extremely strong. They're very strong trades. And I'll just add before we wrap it up, interestingly enough, this AMD ended up being fake news, and this WAL also ended up being fake news. And you could see that it locked limit down at 1130. And while it was halted, it came out that the news was not true. And you could see this gap up to 18.
So when the news came out that with Wall that it was fake news, did you end up getting re-involved to the long side in either Wall or say KRE, or did you only take the short side trades?
Yeah, that's a really great question. I was very prepared to go long WAL with a lot of risk. It was indicating, I believe it was indicating $17. Might have been indicating a little lower, but I'm sorry, it was indicating $14, and I was ready to buy that full risk, just being willing to risk like 1130s, or accepting that risk, I should say, to 1130. And then if it wasn't moving higher right away, I would have cut a lot of that risk, because, you know, in theory, if it opens up at 15, 14, or, you know, anywhere below 20, it should trade right back to where it came from, in theory.
Yeah, like the undisturbed price.
Right, exactly, the undisturbed price. And when it opened up at like 19, that risk reward just didn't feel right to me at all. But if it did open up somewhere, you know, below 15, that is just a massive long. You just want to get long as much as you can and accept that risk, because that's a really great trade. I did, when that news came out, I did get long KRE, and I actually ended up getting stopped out on this one for break even. I just thought there would be much more of an explosive move, and it kind of had just this one up move and then fizzled out, and I didn't really like that. I did give it another shot. I was kind of just scalping this a little bit. I liked that dip below VWAP, holds the 21 EMA, reverses, breaks this little downtrend here. So I did get long again with a stop below here, scaling out into this move, and then leaving that stop at break even.
I was gonna say, because I didn't take the original breakout, but I did get the retracement, like the curl basically under VWAP, and so I think it was like 60. Trying to think of what the actual price of it was. It was like I think basically like the swing where you have the line is like I think it was 40. I think 65, 35, 40. I think, give or take the low of the consolidation.
Yep, 35, 45-ish. Yeah, I think that's a strong trade, because you have a clear stop. You know, it dips below VWAP, reclaims, breaks this downtrend, and it's definitely worth a shot here with the stop below 35, 45. It's a good trade.
Yeah.
But I think just something that you want to think about, and this was like kind of like my mindset when I took this trade, is that I thought that KRE would like rip back towards highs, and it didn't do that. So just because of that, I would want to be scaling out into momentum, because it's just not as strong as I thought it would be in the first place.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.